Hey, how's it going? I'm Nick from Arch Lending. I'm joined today by our special guest, Wojtek Pawlowski, the CEO of Accountable and the CTO of Arch Lending, Himanshu Sahay. We're really excited to have you on today. Would love to hear a little bit about the origin story of your company and what inspired you to start it.
Nice to meet you as well. The origin is pretty painful because it came from financial fraud. So I was working at Maven 11, which is the venture fund out of Amsterdam. And in the early days, we invested in Maple Finance, and I was assigned basically to create the credit arm of Maven called M11 Credit. And we became the so-called pool delegate, meaning credit underwriter on Maple infrastructure. And the business was going great, we had close to $500 million underneath, and we were lending to all of the market makers. Unfortunately, 2022 came. And all of the events like Luna, Celsius, FTX was basically like every day you wake up and the only thing that you can do is to call your borrower and ask them how they are doing. And unfortunately, a couple of these nasty market makers basically falsified their financial statements. Everything was self-reported. So the trust me, bro mentality was very much present. And after FTX, we saw one big dead body, which was 36 million default. And you need to call your LPs overnight and tell them that you didn't have any means to verify nor monitor that these guys were actually doing a good job. And then the idea came, okay, if I'm going to put my face in front of these LPs and in general to people to sell them credit as a way to allocate their capital to, we need to have something fundamentally different. So I can look into the mirror and say, I did everything I could to prevent that situation happening again. So I was lucky enough that after FTX, my current co-founder, he reached out to me saying that he has been working on a technology that allows proving of data in a privacy-preserving way, and that's the absolute critical component, because always the excuse of these borrowers were that they don't want to reveal their secret sauce, right? Like if I give the API keys to my Binance account to a third party, even though it's read-only, like the secret sauce, the strategy, that's why somebody is called flow traders and not another guy that you never heard of, is behind those keys. So they were always saying, we cannot give you that. So we have technology that enables proving the stuff, but at the same time, keeping the privacy with the party. And that was the unlock to create a new, transparent, verifiable way of how people should do business with each other. So these were the humble beginnings, and now we continue with parties like Arch and Galaxy and the rest to really make it a new standard. And it doesn't need to be credit related. We see a lot of these yield bearing, not so stable coins, as I like to call them. And these are this is basically like unsecured lending, right? You're just giving cash to a hedge fund that promises you that they're gonna that they're gonna do a good job with your money. But you get token in exchange, and this token, it should represent the actual activity. So basically the use case is that anything tokenized should use this type of verification, and we treat it a little bit like smart contract audits, right? You want to have a DeFi protocol without an audit, nobody will give you money. You want to have a tokenized financial product, you should verify or prove that you're doing a good job, and then maybe you have a chance to get some dollars in. And that's the mentality that we try to implement.
Yeah, it's quite timely, given today we saw another lender, Blockfills, which is primarily an institutional lender, halted withdrawals. I mean, it's still unclear whether they are insolvent or it's a temporary crunch, but
steady lads, liquidity coming.
History points to the former. What would you say this means day to day? So you've described how you came to this point and like what you do, but day to day as a product, what does Accountable do? Let's keep it general, because I know we'll get into our partnership very soon, but how does this work? And I know you also have some interesting zero-knowledge verification pieces in here. how does that work, and how do you prove it while maintaining privacy?
Yeah, so like we basically give away our software that was developed over the last couple of years internally directly to the client. So the client runs our software on a dedicated machine that is isolated from everything else. And we are building the so-called connectors. And the connector is like a pipe that goes from this machine directly to the data source. So it can be Binance, it can be bank, it can be Arch, it can be Galaxy, it can be anybody. It doesn't need to be API driven. We also support, of course, the whole on-chain part, so wallets, signed documentation, Swift, Fix, bank processes, anything that moves. So we are like this vacuum that runs locally at the client's infrastructure, and they can connect all of the data sources, and we generate proofs that this data came directly from the source and that it wasn't tampered with anything in the process. And how do we make sure that it wasn't tampered? We are running those connectors in secure enclaves, meaning there is like a hardware guarantee that this connector wasn't cracked, wasn't hacked, right? Because like if I give away a software, I don't have control over it. These guys could be, working their ass off to basically try to crack it and basically start presenting the data that is not factual. So we protect the connector with hardware. We can also use zk-TLS, which is another cryptographic technique that basically proves the origin of the data. We feel that the future will be driven by signed APIs. So we wouldn't need to do all of these things if, let's say, Binance, through their API, would just start to say, this data came from us, right? It's as simple as that. In the header of the API response, if they sign and hash, this is our data, we vouch for it, anybody can check that it is real. We are not there yet. So that's why we need to do through the client, go to the account and basically start proving there. So that's how we do it on a client level. And then the client is the full owner of that data. So there is no third party accountable, doesn't see anything. We don't store anything on our servers because that wouldn't be compliant basically with all of those big trading shops. They cannot have any information leaving their infrastructure unless they want it. That's the number one assumption. When they are in control of this data, they can start communicating with it. Everybody that runs accountable software, in fact, runs an accountable node. And all of these nodes create a private permission network. On that network, you can communicate peer-to-peer. So basically, I know somebody asks you, what's your exposure to Bybit? And boom, you send them an answer peer-to-peer. My exposure is XYZ. Somebody else asks you, what was your largest drawdown on Binance, right? During your trading history. Boom, you respond. So it's like a language, right? Like you're in control of your data that is proven, and then you can talk. And then, of course, the node can streamline the data to the public, right? So like we have in our case, you have a gated dashboard for people that are eligible to basically see what's underneath. They can go and with a login method of your liking, they can see the structure itself. We also do a lot of public dashboards for all of these yield-bearing stablecoins or other tokenized products. So people can choose. Do you want to have something private? Do you want to have something public, semi-public? And the granularity of exposures can be decided by the client itself. One guy just want to say, I have the money, that's what you need to know, and that's the public information. But somebody can ask him, I will give you $10 million if you're going to prove to me this one metric continuously in real time, and then I can, trust you more. And you have means to do it. So that's what we do, off-chain and on-chain data verification. And we recently also launched a Vault product, which is basically above that, where that verification can be baked into directly the structure itself. So in the future, I hope that the CLO, for example, or any other structure can be run on-chain end-to-end with that verification baked in, and then you can build risk systems around it and so on and so on.
Well, let's talk about that. So to set the stage for the audience, we recently launched a collateralized loan obligation, which is basically a book of loans that have been packaged together. Arch is the originator and servicer of the loans. Galaxy is the issuer of the facility. Accountable does verification. So everybody who's involved, such as Anchorage as a custodian, our investors coming in, actually buying the token to get the yield from the loans. Everyone in the ecosystem is on the same page about exactly what the health of the book is. So in the structure, we currently have, we've publicly sold 75 million. There's obviously more in there, but we'll talk about that when it can be shared publicly. How does Accountable in this structure, and I think it's quite timely to speak about because last week was a big drawdown in the market. Us, like every other lender, had liquidations. How did Accountable play a role there, and how did everybody, including Anchorage as the trustee and the custodian, Galaxy as the issuer, and the purchaser Grove, which came in and bought 50 million, how did they all stay on the same page with Accountable as the glue?
Yeah, so like I think what you could do instead, right, is to have like some sort of self-reported PDF once a month or an audit every couple of months, and
which we had in the past. But now this is, so one piece I didn't mention is the tokenization. So now that this has been tokenized, anyone can come in and purchase a piece, and they need the real-time verification of the health of the book. So that's when Accountable came in.
Yeah, exactly. And you know, like the market moves 24/7, right? If you one day want to have DeFi interoperability with this token and use it as collateral somewhere else and so on, it would be good not to assume the value of it, but
a PDF's not going to work this time.
Yeah, exactly. But actually peg it to the real performance.
Exactly.
So the way we do it, right, in this particular case, Galaxy runs Accountable node because they are the issuer, let's say the structure owner, let's call it like that. So they run Accountable node, they plug the connector, which in that case is Anchorage, which stores the collateral, and match it with another connector, which is Arch loan management system, effectively. We basically generate proofs that the collateral matches the loan management system and that the on-chain transactions also like represent the reality, and parties that are eligible, so meaning own the debt token, can log into the dashboard and see in real time how is the structure looking like. So you have various analytics like distance to liquidation, distance to margin call on an aggregated level, collateral type, right? The XRP, BTC, ETH, and the proportions of how it plays around. And every single individual loan that is part of the structure, people can actually see what is it. So this token that you have in your hands, it actually, you can see in real time to the very last bit what's underneath. And you can make a decision whether this is something for you or not.
And I almost feel as if, and correct me if I'm wrong, I feel like the transparency of it makes it more valuable in and of itself, right? Like
it reduces the risk significantly, right? So the rate that Arch is paying out to people, or maybe Galaxy, I actually don't know who pays it.
Everyone who is in the tranche, so Grove, Galaxy, anyone else who comes in the future as well.
Exactly. So they know their perceived risk of a black box versus, I can come any moment and during the day, like flash crash 10-10 last year, or currently with the pretty volatile market environment. The data is self-explanatory. They don't need to call Arch in the middle of the night. Hey, how are you doing? Are you still alive? They can check themselves and know that they can trust it, because all of these proofs, right? Like every single user can validate in their local browser that this secure enclave, so this hardware is working properly, that the proofs are being generated. So this is beautiful. And I know that also Galaxy, talks with some TradFi counterparties, even pension funds and banks. And there is a big difference between, we have this cool structure, listen about it, versus this is the structure, right? Like you can see it yourself, and they are apparently like, what the hell? This is better than what we know, because we don't need to wait a couple of months to see the aftermath, what was happening, like 3 months earlier. So the another beautiful part is that I actually don't know how the structure looks like, because Accountable doesn't have access to see the portfolio itself.
So you slept easy last week?
No, like this. We are not invested, unfortunately, in the structure, but then we would have access. But the point is that we are infrastructure provider, and we don't have the debt token, so we don't see what's underneath. So that only proves the point that you can achieve these things without revealing something that is not for the eyes of somebody like me.
So I know there's obviously a lot of applications to Accountable, some more public than private. I think one of the issues the credit industry, so crypto-backed loans, has faced is rebuilding of trust. after 2022 when Celsius, BlockFi, Voyager, etc. went down. A lot of those would have been solved by something like this, where the health of the book is publicly visible. Today, we have a new crop of lenders. Most do not use the software yet today, but they do have external counterparties they raise capital from, either short-term, long-term, or just a combination of them. We're probably one of the first to do it in a structured manner like a CLO, but I know Aladdin issued a bond recently, which there was an article yesterday. People can go read it. But there's other lenders that will continue to raise capital in the space, and I think the space is here to stay. How does Accountable play a part there? Are you the infrastructure layer for everybody? Is that the goal? Are there competitors? What does that look like?
Yeah, so we definitely want to be an industry standard, right? And there is no second best. The thing is that I mentioned that we are creating here a network, right? And on that network, there is this proven information. So we need to be the first one to create such network that any other network will just look empty effectively. And the good part is that at the moment, like good part for us, I guess, that at the moment there is no other network and no real competitor. The only party that can do these type of things, but in a way more simplified manner, are these oracles effectively. So oracles, they, no offense, of course, but they do it in a way more simplistic way. So if you give them the API key, let's say to Coinbase, and on Coinbase there is 100 BTC, they will post on chain that there is 100 BTC on Coinbase and you minted 99 Bitcoin wrappers, meaning you're over collateralized. That's what they can do. What we specialize in is that if there is a hedge fund that trades on 20 different exchanges at the same time with 5 different custodians, can also trade on interactive brokers, buying bonds, and everything moves in real time, you need to have this vacuum that I mentioned, which can absorb all of this information and generate also analytics that people demand effectively. So we are the market leader on that front. There are many other counterparties, both from the credit side or from tokenization side, that are using this software daily. And we see the true strategic shift, how people feel about it or how they perceive it. New protocols that are being built at the moment, they start from it, that we need to have transparency in place because there is a million other yield options on the planet. How people gonna come to us? They only see yield. So they make transparency an edge. And I think that was also the reason why you guys and Galaxy wanted to do it, because you have a very good structure with good yield. There is a Galaxy name, there is Arch name, Anchorage name. So the only thing that was maybe missing is to make transparency your edge, because other opportunities look worse because they don't have it.
I almost see a way of you guys creating I don't want to say a credit score, but basically a credit score.
We don't want that.
For structures like this. If you have the network and you have all these counterparties on it with verification of data, you could determine the health of a counterparty, which can then be used in either accessing credit, or it can be used by retail or institutional investors to come in and use that as a yield opportunity. And I think there's a huge opportunity there where it doesn't exist today, really. There's independent sources of data, which are not quite vetted, but this could be like a truly independent source of data.
I agree. We are not going in this direction. I will explain you why. Because we are neutral, right? So we don't make opinions about our clients, because if I would say that your CLO, it's...
well, someone could build on top of it, right?
And that's my point. So we already have one rating agency that also runs Accountable Node. And then a party like you, or in that case, Galaxy, right, could push the data peer-to-peer to feed their risk model, and you have a live updated credit rating based on proven data.
Got it.
So I want somebody like S&P, right, to run like that. I'm not going to do it myself, because that's betraying the ethos of being neutral and not making opinions about people, just telling the truth. But somebody else should do it. And we feel this is definitely the next stage. It's just... there are not many partners that can do it, that people would value their opinion.
Yeah, for sure. The history of your business and the values you have are important. Like I think it's interesting you mentioned neutrality being something that's a competitive edge. Are there other product decisions or directions you wouldn't move the company in based on your values?
So listen, I also feel like it's nice to have this real-time verification software, but it would be nice to also have a third party, like an auditor, that still comes in and doesn't necessarily do the full audit. Like full audit should stay. Let's leave them aside. There is this big gap between the full audit that takes months and a real-time verification software as we have. The software, given that we give it away to the client, we don't have control whether they added every single account that they have, right? Like sometimes we can determine it through the APIs that I know from OKX. I'm just giving an example. From OKX, you can see that this is the right entity and everything. From some parties, you don't know. So maybe they're skipping like one wallet that has some, negative balance, right? The chance for it is small because to get away with this lie, you would need to, do it continuously and everything else would need to add up. And you're also signing usually legal agreements and so on. So this is straight up fraud. But there is this opportunity that Arch has a massive liability on a side that the network doesn't see, and then it would be good to have this auditor that performs something like a light audit, comes in every 2 weeks, every month, and basically attests everything plugged into account correctly and any liabilities that the system doesn't see on a side to add up. And then you have a full clock, right? Like something real time with very high degree of probability. This is the truth. Then you have somebody attesting, yes, it is the truth, and then wrap it up with a full audit. And we also cannot be the auditor ourselves, right? Because first of all, you need to have papers to be an auditor, and it should be another independent party.
We actually have auditors in the office right now as we speak, like finishing up our 2025 audit, because we have been audited every year. And I think it's very important for a lender to be audited. I don't think every lender or most lenders are, but it's a very painful process. It takes a long time. And if we can do it on a more frequent basis, much like there's proof of reserves for a different kind of counterparty, I think that would be a very big foot forward for the industry.
And I think that this will be the future, right? Because again, a naked software, we are solving something big here, undeniable, but we don't have 100% guarantee that this is everything, right? So I'm very transparent about it, that naked software used by the client itself is not the end goal. There should be somebody time to time that comes in and says, thumbs up, this is working well. And everything needs time basically to evolve into that direction. People are sometimes saying, if it's not 100% accurate, then what's the value? Then compare it with a PDF once a month that everything is self-reported. Of course, there is value. And again, it's extremely hard to lie with this type of software. It's much harder than without it, right? So we are doing our best.
That makes sense. I think we've talked a little bit about the things that you don't want to move into. As you look towards the future for 2026, what do you see as an avenue for growth? Are you looking to scale with the same product offering to new organizations, or are you looking to bring new product to market?
So as said, like end of last year, we launched our vaults, and another hot topic. We're working on it for a year and a half, basically from scratch. We wanted to basically, you inspired us, you and Galaxy, like this CLO structure. Galaxy told me the future will be driven by smart contracts, and these type of structures should be run on chain. In order to do it, you need to have a very customizable and modular way how the vaults work, because everything is a strategy. You need tranching, you need accredited investor survey, you need KYC, and everything needs to be customizable in order to accommodate the needs of the party. And I feel like a lot of protocols are basically dictating that this is the way we do it. You either fit in or get lost, right? So we created the vaults as a menu. We call it vaults as a service, where every single step, like I know if some people are familiar with Conduit. So Conduit was to create your own layer 2 or layer 3. You click, I need this, I don't need that, I need this, right? Like it's basically like a step-by-step approach, like a decision tree. And we are basically growing this decision tree day by day based on customer demand. The vaults are doing great. Actually, next week we're gonna announce, so I think I can already say it here because it will be public, that one large institutional lender from Europe, Valos, which is a Finnish lender, it's opening up a vault on accountable. accountable, and it will be seeded with 100 million cash from their LPs, and they will be lending to the large firms here. So we are and everything will be backed by this verification again. So every single vote on accountable, mandatory. You need to have the underlying verification to show where is the money going, what are the exposures, what is the performance, and so on. So we want to prepare basically a platform where if somebody wants verification, the way to launch your financial product, the way you want it, not the way I want it, because you are the client, is one step away, basically. So we want to grow it to a size that is, screaming that this is serious. And we are getting close to that.
That's awesome. What's your personal conviction in Bitcoin? Are you a holder yourself?
So to be honest, and that's a bit of luck. Some people would say that it's not luck. You should always have exposure to crypto, which was the case for the last, I actually realized I'm in crypto since 2017. So for the last 9 years, and I'm 29. So, 29 years out of 29, that sounds very serious to be in one industry. I never had a period where I was out of position. And it's my first time I actually sold it all, like I think majority like before the flash crash in October, which again, luck. And recently I sold the rest of it because I became a founder, right? And I decided I don't have headspace for it. I also don't like how the market looks like. I can always buy back. My size, it's not significant to move the market.
You gotta borrow against it. You know the contract. You never sell.
Listen, that's why the CLO...
At least Bitcoin. I wouldn't say that for the rest of crypto. I only hold Bitcoin.
Okay, so listen, it's a good shopping time. I actually started buying back, but the thing is that I think crypto is not going away. Especially stuff like Bitcoin is here to stay, and in the long run, it will do well. I was always like a very much Ethereum maxi, so majority of my bets were on that side. And unfortunately, it didn't play out nicely, but the truth is, you're going to ask 10 people on the street, no incentives, nothing else, just pure chain. Where do you want to deal? Where do you want to do business? 9 out of 10 will tell you Ethereum mainnet. And I think this one day will decide that ETH will perform very well. It didn't realize this time. Actually, it was a big disappointment because I was hoping that this is like a nice beta on Bitcoin and a very safe bet. It was a horrible beta, right? Like it didn't break all-time high. So I'm bullish, and I think for guys like us, right? Like we are in a bull market. The demand for tokenized products and for everything that is happening on that side of business is going great. Stablecoin supply, I think it's at all-time high, right? So that tells you the story that crypto is being used, is being adopted. The market prices are a different story, right? And it's a good shopping time. I don't know if this is the bottom or close to that, but I think I would definitely be interested, and I'm doing it myself to start. Not a financial advice. I'm a pretty bad trader, I realized after a couple of years.
Very cool. Well, thank you so much for joining us and making the time. Once again, we hope you have a great 2026, and we'll definitely be in touch soon. Once again, this is
View from the Arch. It's the same name as our newsletter. We haven't done one in a few months, but we're back, and we have a lot more coming. So look forward to it. A lot more people we work with, people in the industry, interesting people like Wojtek who are pushing the needle and making this industry more secure, safe, and just more usable. Thank you.
Thank you.